Hello and welcome to our comprehensive overview of the equities market alongside our fixed income analysis covering key developments and trends that shaped the financial landscape in the week ended 31st May 2024. I'll be guiding you through the key highlights and market movements. Starting with the regional perspective, African equities markets exhibited a bullish sentiment overall, achieving a median return of 0.1%. Among the standout performers, Nigeria led the pack with an impressive 1.7% week-on-week return. On the other end of the spectrum, South Africa lagged behind, registering a significant decline of 3.1% for the week. In Kenya, the equities market experienced mild bearish trend, which is associated with a downward trend in the stock market where prices of securities are declining. The Nairobi All-Share Index saw a slight dip of 0.1%, closing the week at 112.98 points. Despite this, the year-to-date performance remains strong at 22.7%. Trading activity in the Kenyan market surged dramatically by 422.2%, with total turnover rising to 11.6 billion Kenyan shillings from 2.2 billion Kenyan shillings in the previous week. This uptick in activity was notably influenced by foreign investors, whose participation increased to 51.9% of total market activity. Foreign investors remained net buyers, contributing net inflows of 8.9 billion Kenyan shillings into Kenyan equities. This bullish stance by foreign investors underscores their growing confidence in the market. I&M Group emerged as the most traded counter of the week, which accounts for a staggering 69.7% of the total market activity. Foreign investors heavily favored I&M Group, injecting net inflows of 8.1 billion Kenyan shillings. Conversely, British American Tobacco Kenya faced bearish foreign sentiment, recording net outflows of 146.06 million Kenyan shillings. This indicates a notable divergence in investor confidence across different sectors and companies. Turning to the fixed income highlights of the week, Treasury bills were oversubscribed with a subscription rate of 139.63%, up from 100.2% the previous week. The 91-day paper saw bids totaling 17.86 billion Kenyan shillings, driven by attractive real yields in an easing risk landscape. The 91-day Treasury bill rate increased slightly to 15.955%, while the 182-day and 364-day paper saw yield increases of 4.4 and 8.3 basis points, respectively. The government aims to raise 60 billion Kenyan shillings through the reopening of 4 bonds with coupon rates ranging from 14.15% to 18.39%. Bidding closes on June 5th for the first pair of bonds and on June 12th for the other pair. In the secondary bond market, trading value rose by 25.9% to 28.26 billion shillings. The NSE bond index climbed by 53 basis points, driven by a decline in 15-year yields. Notably, the 10-year yield surged by 38.5 basis points, while the 15-year yield eased by 46.2 basis points. We anticipate further flattening of the yield curve at the short end. Kenya's Eurobond yield increased by an average of 12 basis points, reflecting cautious investor sentiment, pushing yields up by an average of 12 basis points week on week. We expect these international yields to remain stable within the single-digit range in the medium term. Turning to the macroeconomic developments, the Kenyan shilling strengthened marginally against the US dollar, appreciating by 60 basis points to 130.23 Kenyan shillings. This brings the shilling's year-to-date appreciation to 16.8%. However, the official Forex reserves decreased slightly to 6.9 billion US dollars, now offering about 3.6 months of import cover, below the statutory requirement of 4 months. Inflation data from the Kenyan National Bureau of Statistics showed a slight uptick of the headline inflation rate to 5.1% in May 2024, from 5.0% in April 2024. This increase was primarily driven by a 60 basis point rise in food inflation to 6.2%, due to reduced supplies amid extreme weather conditions. However, fuel inflation slowed to 7.8%, helped by stable oil prices and a steady shilling. On the global front, the US dollar weakened by 0.1% against a basket of currencies following stable US inflation data, which has raised hopes for potential rate cuts later this year. Yields on US Treasuries saw mild fluctuations, with the 2-year yield decreasing by 8 basis points and the 10-year yield increasing by 3 basis points. Lastly, global oil prices exhibited mixed trends. UAE Marban prices decreased by 160 basis points to 81.86 US dollars per barrel, while Brent crude oil prices fell by 120 basis points to 81.11 US dollars per barrel by the end of the week. That wraps up our weekly market highlights for the week. The African equities markets continue to show varied performance across regions, with significant activity in the Kenyan markets, driven by foreign investments. Thank you for watching. Stay tuned for more updates in the coming weeks.